today's session. Hi, I'm Shivani. I work at Climate Trends. Nice to have all of you here. We are joined today by Shantanu, who is the Energy Finance Analyst at IEEFA, and we have Neha Kumar, who heads the South Asia Program at Climate Bonds Initiative. We are just taking this session to understand and unlock a little bit about sovereign green bonds. It's been in the news for the last few months, ever since the government announced the sovereign green bond framework in November. Um, and that's really what got the conversation starting in the Indian sort of media space, etc. We started this year with the auctioning in two tranches of the amounts of 8,000 crores each. One was on January 25th and the other one was Feb 9th. And between all of this, we had uh, the government also announcing the allocation during the budget of some of the amount that was raised towards spending on green infrastructure. Before I sort of pose a few questions to the both of you, I just wanted to announce a few housekeeping rules. Do please keep yourself on mute. And if you have any questions, there is a Q&A box that we'll come to later in the conversation. We'll start with a few questions for Shantanu and then move on to Neha. And if I have any questions, I'll move on to that before opening it up for Q&A. We hope to be able to wrap up in 90 minutes, but we can wrap up earlier as well if we don't have too many questions. So that's how we'll go with the flow. So I'll start with you, Shantanu. Thank you again for taking the time. I wanted to start with something very, very basic, and we will have some very basic questions as well in this sort of session. So could you, Shantanu, tell us a little bit about what sovereign green bonds are and how do they compare with green bonds or any other bonds?
Sure. Thank you, Shivani, and thanks a lot for having this very important session. I think sovereign green bonds are an extremely important instrument for helping India achieve its energy transition targets. And good that we are having this conversation and trying to unlock or unpack this particular instrument. So to answer the question, see, sovereign green bonds are very similar to plain vanilla or normal government bonds, right? The only difference is when you talk about sovereign green bonds, they are designated for financing specific green infrastructure projects, right? So when I say green infrastructure projects, these include certain categories of investments. For example, renewable energy generation or energy efficiency, or green mobility or e-mobility, climate adaptation projects, marine and aquatic, conservation projects. So these are some of the major categories. So as opposed to a normal GSEC, a sovereign green bond can only be used for the financing of these specific heads or categories of investments. So that's the first difference. Second is a GSEC might be or government security might be issued by the government for, let's say, plugging its budget deficit or for financing any general expenditure that it has. When you talk about GSECs, like the sovereign green bonds, like I mentioned, they can only be used for financing specific projects. So these projects, or at least the categories of projects, need to be mentioned in a document, which is released pre-issuance of this particular instrument, right? Which is in India's case, the sovereign green bond framework, right? Which specifies these are the use of proceeds, these are the projects that can be financed. So that is an extremely important aspect of a green bond opposed to a normal GSEC, right? And then you have other nuances also, which are very important for investors who are investing in green securities. For example, how are the proceeds going to be managed? Right? How are you going to report on the use of the proceeds, and what is the eligibility criteria to understand what you define as green and not green? So these nuances basically differentiate a sovereign green bond from a normal GSEC.
That's very useful, but I have a even more fundamental question. Why is there a need to issue green bonds in the first place?
Right. Yeah, I think that we also need to address this particular question first. So, see, first of all, when you talk about these first issuance, the maiden issuance of sovereign green bond, it's just about 1% of the total government budgetary outlay or borrowing program for this particular fiscal, right? So it's not much that the government is planning to issue, right? Somewhere around $2 billion. Now you might say, why go for a green bond opposed to a normal GSEC, right? So there are several reasons for that. The first reason is that when you issue a green bond, right, you give a signal to global investors, to the world as a whole, that India is committed towards achieving its energy targets, green energy targets, or energy transition targets, right? And that gives a very it sends a positive reinforcement that India is committed towards its achieving its green goals. That's one, right? Uh, that's a positive messaging. Second thing, a very important thing is that uh, once a sovereign issues a green bond, and it's a bit technical, so do let me know if it's not very clear. There is something known as a yield curve that is created, right? Which is basically saying that 5 and 10 year sovereign green bonds that have been issued, that gives a benchmark for other corporates, other municipalities, other entities in India, that is domestic issuers, to issue their respective green bonds, taking the sovereign green bond yields as a benchmark, right? Now, I'll just try to explain it quickly in simpler terms. Uh, if let's say the sovereign green bond is issued at 7.29% interest rate, right? Very simply, if a corporate wants to issue his green bonds in India, right, he would consider that 7.29% as a benchmark, right, and then adjust their the interest rates upwards depending on the riskiness of their the risk profile, right? So a sovereign green bond provides that benchmark for you to have that upward or downward change in the interest that you charge on your green bond, right? So that's the second important aspect of having a sovereign green bond in place. Uh, the third very important thing is the government, through the issuance of green bonds, is able to access a completely different set of investors, right? So globally, somewhere around 120, $130 trillion worth of capital is aligned to sustainable investments, and these, and this is a figure that I'm quoting from UNPRI, that is in United Nations Principles of Responsible Investing. So globally, institutional investors have aligned this much amount of capital, and saying that we would invest in sustainable investments going forward, right? So when you have a green bond issuance in place, you are able to access this investor class directly for the financing of your green infrastructure projects, right? So it is tapping into a new set of investors altogether, right? So that's another benefit. And then I would say, obviously, related to this one, you want to reach out to this investor class, and one of the ways you can do that is through issuance of green bonds, which really say that we are committed towards investing into green infrastructure projects in India, and that is why we are issuing these securities. So I would say these are some of the primary reasons why, in the first place, the government of India is releasing sovereign green bonds as opposed to normal G6. It could have financed these green infrastructure projects through normal G6 also, but these are some of the reasons why it went for a sovereign green bond. Yeah. Hope that was clear.
That is definitely useful, especially as a market signal, for private investors, etc. And that brings me to the question: who actually can make these kind of investments? Can individuals like you and me sort of invest or purchase green bonds, or is it institutions? Is it and I think you partly answered it. Is it meant for only audiences in India, or is it also something that is opened up to the global market?
Yeah. See, mostly the sovereign green bonds, they are targeted towards tapping into, like I mentioned, the global sustainability aligned or ESG aligned investors, right? Then the larger institutional investors in India, right? For example, the banks, the foundations, the insurers, the pension funds, which are operating domestically and globally. But as per RBI regulations, around 5% of every GSEC issuance is restricted for investments by individuals also, right? So you and me can also invest into sovereign green bonds, but the limit of our investments is restricted to this 5% threshold. So yeah, but again, the main investors here are going to be the global and domestic institutional investors, which includes pension funds, insurance companies, large asset managers like for example, like BlackRock, Vanguard, big asset managers, banks, foundations, sovereign wealth funds, all of these entities.
That is useful. I will move on to a few questions and ask Neha if you can sort of throw some light on where can sovereign green bonds be used? Is there a clear framework? I think Shantanu to some extent sort of answered that, but if you can also elaborate a little more on it in terms of where the allocations can be made from the amount that is raised, etc. I think you're on mute. Yeah.
No, thank you for inviting both Shantanu and I to this conversation. And both of us have been writing and speaking about these things. And also a pleasure to be interacting with journalists and other interested participants, because I think some of these things can get very technical. So I hope I'll just try to de-jargonize a little bit of it for all of us to understand it a bit better. So like Shantanu explained specifically about GSECs and what we can say green GSEC, right? This is the sovereign green bond in that sense. Allocation of proceeds, to my mind, it is an ultimate test for any kind of green bond issued, whether sovereign or non-sovereign. But before that, I also want to make a point that a sovereign green bond has to be looked as a part of an overarching strategy of sustainable financing. Okay, so on its own, it will do something, but it will not be enough. So what India is doing in sort of right now in a manner that doesn't appear to be a comprehensive sustainable investment strategy, but there are these pockets that there are policy signals, there are market intervention signals that we are getting from the government as well as from the market, where we know that the direction of travel is perhaps being set. What needs to be set, it is in a more comprehensive strategic manner going forward. And in that respect, sovereign green bonds are a very, very effective part of what we would call a sustainable finance arsenal. And I would really say arsenal, right? And so what Shantanu just described was what are the advantages in terms of preferential capital, in terms of investors who are looking at thematic bond space. And hence, he also talked about, the lower yield that these bonds actually land at. Which is important. So, but let me just come to your question first and then try to also answer a couple of things that I have in my mind. So thematic bond market, the main qualifier is that it gets labeled as green, sustainable, and other labels, right? So you have to be true to label, which means that you're, like Shantanu mentioned, that you will have to pre-assign or nominate those projects in a few categories, which can be called green. Now, green is a vast space. So if you would have looked at, say, SEBI green bond guidelines, they are broad categories of 8 kind of themes that you can invest in, from sustainable transport to energy and to everything else. Just continuing from what Shantanu said, that every green bond issuer, whether that's a sovereign or a non-sovereign, will have to define those categories and those eligibility criteria within the green bond framework. And Indian government, Ministry of Finance, brought that out in November 2022. This follows the international guidelines, which are called ICMA, International Capital Management Association. So these are broad principles. What it did in that framework and was to broadly lay out, and it is a very clear, lucid, simple framework to understand, but it has its own strengths and slight weaknesses, and I will just come to that. So it broadly laid out 9 categories, okay? And it is a shades of green approach that the second party opinion provider gave it, categorized, and it is looked as medium to dark green. So that's our rating for the green bond framework. Now, in terms of the methodology, what it means is that dark green are those project categories where you have sort of all the benefits of the short and the long term. It's very clearly defined. and then as the shade starts getting lighter, then you have space for some of the things that you probably have not addressed through clearly defined criteria. Okay, so now coming to the sovereign green bond that we have over here. So at the level of principles, the green bond framework says energy efficiency, emissions reduction, but also goes into SDG as well as adaptation, which is a great thing, right? Because these are spaces where, especially adaptation, where private sector takes a little longer to come in. So if government is issuing a bond, and then it can actually channel that money to some of these spaces where private investment will be a little bit slow to come in. Now, in 2022 budget, we had described that our first sovereign green bond will be the proceeds from that will be channeled to public infrastructure projects, which will reduce the carbon intensity of the economy according to our goals and objectives that we have defined. So one, I give, kudos to the Ministry of Finance that in its first issuance, it has largely stuck to the dark green category of all the eligible assets and projects and expenditures that have been highlighted in the green bond framework. So if you look at those use of proceeds that the budget spells out, there are basically 4 ministries that get the monies out of the issuance. MNRE, Ministry of Railways, MAHUA, and Ministry of Environment and Forest. Now, just a prima facie analysis of that would say, and it is just really, really high level, okay, that both MNRE and Ministry of Railways are pretty clear in terms of metros, in terms of, the solar and wind projects, both grid scale and decentralized, which is KUSUM. So that's pretty clear, okay. In the Ministry of Finance allocation, which is to afforestation program, the second party opinion tells you that it is a little bit open-ended. Why? And it's good to take these things into account because it's our first issuance. And of course, that is also the difference between when you do large principle-based allocation as opposed to more criteria-based allocations, and that is what investors are after, really, as clear the use of proceeds, that's what builds the investor confidence. Yeah. So say for national afforestation program, the risk that the SPO highlighted was of monoculture plantations, which means that you would have to closely monitor it, that it doesn't lead to such a thing. However, in terms of volume, this volume that use of proceeds have allocated is really, really small. Okay, so thankfully it isn't a large chunk, so also SPO says that it comes in the light green category. Also SPO says that, okay, it can give you some short-term benefits, but on a longer term, the resilience and mitigation effects are slightly unclear. So these are the things which will become very, very important even going forward, that, the evaluation and selection of proceeds as we go forward is sort of clear. It is more criteria backed as much as possible. And, India is a fledgling market, and both sovereign as well as non-sovereign issuers, they are right now, what they have with them is some international standards, some international frameworks. So if the sovereign issuance keeps to a very high benchmark, okay, then it actually is a big signaling effect that it has for the corporate issuers and non-sovereign issuers as well. So in terms of very specifically answering that, yes, our first issuance has done well in terms of the allocation. There is one thing which stands out, which is the metro allocation to MAHUA, which is equity investment. Because mostly sovereign green bonds, the eligible expenditures lie also in subsidies and grants. They don't go into equity, but that's a very small amount. And so it's not about the greenness of that particular allocation. It is just the category that it is equity and not subsidies. Yeah. So that's I mean, that's the answer to the first question. And I would hope that as we build out a program, even our own criteria will get more refined and more defined. Yeah. And for that, the Indian market has been using international frameworks and standards. So ICMA is a very, very broadly, widely used framework or principle based. And Climate Bond Standard, which is the organization that I work with, is a sort of a world global gold standard in terms of criteria backed standards. So, and more than nearly about 50% of Indian corporate issuers are following the standards by climate bonds. So there is already a momentum. So I think going forward, we will, and we've been it'll be good also that the taxonomy development that we've been hearing of by Ministry of Finance, that comes out. And so I think this is a journey. This is the very first issuance. This has a great signaling effect. It can even be a much more stronger demonstration effect going forward. And so, yeah, I will say that look at it not in isolation. Look at it as a part of a roadmap that is emerging and will need to be worked at and probably accelerated, because if you want to maximize the gains, you will have to put many pillars in place.
Thank you for sort of giving a fair amount of detail of the different kind of projects under which, under the first issuance, we have spent money, and also, how robust it is. But of course, as you said, you sort of indicated to some extent there might be some areas which need tightening. Maybe the green taxonomy to some extent will help in that, and maybe we have additional criteria to ensure that it's more robust going forward. I had a quick question. How I read in a few places that it seems like the first issuance was quite successful, and I wanted to know what your thoughts on that were. And just to follow up with that, I also read somewhere that we are thinking of another auction in September. So I was thinking, what is it that we need to do between now and September, learning from the experiences of the first and second issuance?
Okay, so let me just put it in a broader context again. One, that it is a new avenue for the government to finance Paris targets and going forward, perhaps even SDG targets. Right now we are very focused on energy, green energy, etc. And let's also look at it that how sovereign green bonds are actually world over are getting into this space. Okay, so nearly 40 countries have issued green bonds, sovereign. Okay, and but it is a late entrant, and that is why. And why it is a late entrant? Because whatever money that government raises, it is by definition needs to be fungible. It should be able to move around. Okay, what is very important and special about green bonds is the earmarking of that money, right? And I think it is important, and various governments take different approaches, and India has done something very, very good, that it has put this money in the public accounts, it's a separate fund. So you will have that. So there is a consolidated fund, there is a contingency fund, there is a public account, fund, and you have that. So it's very clearly earmarked. Now, what you will need to do is that you should be able to report also very well on this, so that all of this builds the investor confidence that everything is as raised as and then allocated. So you said that how did it perform? And so I mean, there have been many things about, okay, it's such a little basis points thing, what's the big deal about it? The big deal is that it actually did beat two major odds. One, you have the rising interest rates globally. Okay, this issuance was in local currency and in domestic market. So double whammy, right? So you had to attract international investors against these odds. Okay, so so that was one thing. And second, our domestic investor base is it's non-ESG aligned, if I could say it. It's like really fledgling. So Indian investors, institutional investors, pension funds, they don't differentiate between green, blue paper and whatever, that the color doesn't matter. Okay, so when you actually have a so when you actually have a market conditions where the demand exists but is uncertain in terms of how you are floating your bond, right? It's local currency, domestic. So one would recall that government kept on saying that it is an appetite test, and it is a small issuance. I mean, we can lap up as much money as we want, because it is very, very important that money will come, but the investors for that are non-resident investors. They are international investors. So having a 5 to 6 basis point greenium, which is how that investors are ready to pay for green credentials, green label, has actually a much more signaling effect than just, okay, now the borrowing cost has suddenly come so down that, it has really given that kind of an advantage. It is an advantage, but this greenium will also grow larger if the volume grows larger, right? So it is the first issue. So one has to really look at it that we're just beginning. Okay, and second, I would say that the market making aspect of this. So I really say that please go beyond the greenium. It's not, governments don't actually issue only for pricing advantage. In fact, the global surveys show that greenium is bottommost ranked in terms of their motivators. What is motivating them? Growing the local market. What is motivating them? Diversifying the pool of investors. Okay. And in that sense, I think government has done well in actually seeing the result. The result shows you that that there is a demand that exists, and it can be propelled further. But of course, you would require some regulatory action, some incentives, and that will be required. So that is how I would rate its performance. That in use of proceeds, done well, very good. In terms of signaling effect, we now know that the market exists, the demand exists, and we need to support that demand. And we also know that there is a possibility, and perhaps it should be also our goal and objective to grow the local currency domestic market. That is very, very important for India to do, or for emerging economies to do.
That's quite useful. It seems like a litmus test, and it seems to have passed that litmus test. Is there something India can do under the G20 presidency to leverage sovereign green bonds?
Oh, absolutely. And I think, this really comes at this time, right, when we are, it's our presidency year, and we've successfully demonstrated a sustainable finance mechanism that can actually be used to, I would say, foster a systematic program of local currency sovereign green issuances and for emerging economies. And I think we can take the lead. I think there is a growing interest in emerging economies. Nearly 8 to 10 of them have actually issued a local currency as well. And generally, the global trends are that 75%, 76% of all the sovereign green issuances are in hard currency at our international markets. Okay. And only a quarter of them perhaps are in local currency, and even lesser in domestic markets. And why is that? It is simply because the pool of investors, pool of capital lies there, right? So that's what the liquidity lies there, the pool of investors lies there. So the kind of benefits that you gain from a demand where it exists is much higher than when you try to do that in a fledgling market, right? So, but I think so that's a great opportunity for India to say that, okay, our macro financial fundamentals are in place. We do need to borrow from the market, Okay, we do need to bridge the financing gap, and we have shown that this can be done. And we are saying that let's do it in local currency, domestic issuance space, because that will hedge against the risk of currency fluctuation, which is sort of a tidal risk, right? I mean, if the Fed raises the interest, then the cost of borrowing increases. Then there is a flight of capital from emerging economies. I mean, in last year, $50 billion went out of the emerging economies, right? And then you do a great deal of service to the local market creation, because if you are issuing in your local currency and in the domestic market, you create sort of a demand, and a lot of smaller projects also come into the pipeline, yeah, which sort of gets screened out when you are going abroad, in the offshore markets, because general rule of thumb, you would say that investors look at anything starting from $200 million. It's a general rule of thumb. Smaller deals also happen, but when you do it domestic, you give that push. You get more green projects out into the market.
That's quite useful. Thank you, Neha. I had a few questions. Maybe either of you can sort of respond to it. And to some extent, both of you alluded to the fact that this is, these are the first steps. This is a fledgling market. India is going to need, by some estimates, 10 trillion to transition by 2070. From that perspective, to what extent can sovereign green bonds actually scale up? What is the potential of that? And what are the limitations of it in some way?
Shantanu, go ahead.
Sure. See, in terms of the potential, I'll talk about the potential first. I think right now, as Neha mentioned, from an Indian perspective, the domestic investor is almost non-aligned to ESG, right? You wouldn't find any large ESG aligned investor out of India. So the response and the greenium that we've generated on the first tranche of the sovereign green bond, that's a very good, I would say, a very welcome move. That we don't have any ESG aligned investors who do not differentiate between green and non-green. Still, we were able to generate this 6 basis point greenium, right? So going forward, the potential would increase if more and more domestic investors align their investment decision making process with ESG. That is, let's say the LIC, the EPFOs of the world, they start considering ESG into their investment decision making process. That would nudge them to then consider a greenium that they can pay for further issuances of sovereign green bonds, right? So I think in that sense, and obviously, the biggest investors in the equity and the debt market in India are these, megaliths, LICs, EPFOs. So I think going forward, as PFRDA, IDEI change their or revise their investment, directions for these entities, it would provide them a nudge to invest more into such issues. So that's where the potential lies. Secondly, I would say, given all the volatility in global financial markets today, right? There've been questions about, does ESG even matter in such markets? We've seen that there's been a lot of money that has been going into fossil fuel assets. We've seen fossil fuel giants, generating huge record-breaking profits, right? If such a market, a sovereign green bond, a maiden sovereign green bond, has been able to generate respectable greenium, I would say going forward, when the volatility settles down, and it's not that ESG has gone away, right? The ESG market is growing in tandem with whatever is happening. I would say going forward, the potential for or the alignment of investors globally is going to increase with the ESG theme, and there would be more investor interest, not just from India but also globally, for investing into such issues. So I think both from a domestic and an international perspective, things look really bright for such situations from an Indian perspective. And Neha mentioned that this is just to test the markets, right? It's just 1% of total government outlay or borrowing program. So now we've seen that there is a demand for such issuances, right? And like you've mentioned, there is some news that the government would be coming up with another issue. So I think not just green bonds, you might see other instruments, for example, sustainability linked bonds, right? That's another large segment of the sustainable finance market that's growing rapidly. You might even see something like a sovereign sustainability linked bonds that is being issued from an Indian perspective, right? So I think this is a win, and this is only going to give confidence to the government to carry out more issuances in the future. So that's on the potential. Sorry, what was the second part?
The potential from the perspective of, the kind of capital that we need to raise towards transition. What are the limitations of the sovereign green bonds from that perspective?
See, the limitations, I would say, and Neha has highlighted some of them already. Even though we have, been on the dark green side of, categorizing of what assets need to be financed, I would say there is some, for example, we have classified public transport run on CNG as an eligible project, right? For some set of investors, some global investors might consider that as non-green, right? Now that might, shun away a certain set of investors who would otherwise be interested in investing in a certain issue, right? So I think, and I've had written an opinion piece on this, and we said that if you want to, finance CNG or any kind of fossil fuel for that matter, you already have the normal market to finance that. Why do we need to group that into a green bond or a green issuances? So, and if you want to do that, have a separate segment of the market, let's say a transition bond, right, which probably can be raised, which does not give any kind of negative connotations to what green is from an Indian perspective, right? So I think that's where improvement could be done. Then, as Neha mentioned, IEEFA is, it's probably the gold standard when it comes to green issuances, green debt issuances globally. And there were a lot of hits in India's sovereign green bond framework, but there were some misses also when you compare it with ICMA standards. One of them, I would say, is that ICMA considers verification, both pre and post verification, as recommended, steps for bolstering investor confidence. Even though we have had a pre-issuance verification of second-party opinion, right, and which is given a light green, I believe, light green rating to our framework. A post-issuance verification of the processes through which the the issuance proceeds are going to be managed, right, are going to be allocated to different projects. I think a third-party order of that would have been good, right? I think that's where it does not really align completely with ICMA, our sovereign green bond framework. Second, I would say is that I'm just mentioning some of the things that can be improved going forward, which are going to be not just limitations in this one, but this issuance, but further issuances also. Secondly, I think when an investor invests in your green bond, a specific green bond, they also want to see incremental, effect of the proceeds that they're providing. They want to see that the issuance proceeds are invested in new projects, not just refinancing of old projects, right? So that incremental effect, right, that needs to be seen by the investors. Now, India, the sovereign green bond framework does not give any segmentations of how what kind of proceeds will be used for finance versus refinance, right? And per se, finance would be a preferred category by green bond investors, right? Which directly shows them that the money that they're putting into green bond is providing incremental benefits in, let's say, emission reduction. So I think that that is where some clarity would have been good, and going forward, it could be improved. And yeah, I think overall, in terms of limitations, there is another second-party opinion, which was not official, but another globally recognized entity that provided the opinion, and they said there is a slight chance wherein you might see an energy efficiency project, right, a thermal power unit, where to improve the energy efficiency of that particular unit, you do a retrofit, right, which might not be considered as green by certain set of investors, right? Though it's an energy efficiency project, if it's considered as an eligible project by the Indian government, by the Indian sovereign green bond framework, it might then have a negative connotation in the sense that this is not really a green project in the truest sense, right? So you need to really be sure about what is your eligibility criteria. That needs to be very transparent, and that needs to have no connotations of greenwashings attached to it. So I think going forward, you need the Indian government really needs to, or the Green Bond framework really needs to work on these aspects also. And those, I think, are some of the limitations which I see, which can be improved going forward.
Thank you. That's quite useful. In fact, that answers or should answer to some extent the two questions on greenwashing that have come up in the Q&A as well. I had a follow-up question on how projects are likely to be evaluated, and I think you alluded to it a little bit in the beginning, Shantanu. And I imagine that that would be important for investors going forward in new issuances, etc.
Um, is that a question to one of us?
Either of you.
Okay. Yeah, I think, see, there are two or three things. One, that the process of evaluation actually has to begin in time. Okay, so it should not be a rushed exercise, first of all. Okay, and everybody's learning. It's a very first issuance, you know. So we have a green finance working committee, which is inviting the lists from different ministries. Then, you know, you have that that committee which looks at its evaluation and all. The thing that Shantanu mentioned is, I mean, that aspect can't be overemphasized, that try to stick to the best practice approach. Okay, that is the way to build market. That is the way to build investor confidence. And you are looking at getting the international investors also, you know, so it is not, that's why, I mean, the regulation that just came just ahead of the issuance, which was to get non-resident investors participate in it through a fully accessible route without any investment cap, was to actually get that investor base, you know. So we have seen that the corporate issuers, you know, whether from the public entity or the private entity, what they are doing is, because the demand lies over there, and the large ones who have, you know, good ratings and good balance sheets, they're basically going offshore. Okay, they know that the demand is there and they will go offshore. But it is, the investor expectation is not only of a green bond, it is of a good or a credible green bond. It is of those pipelines that are clearly demarcated. So you should be able to identify those projects so that that pipeline is visible based on clear criteria. Now, Government of India, of course, you know, right now it is a second party opinion, and there's a third party verification, by the way, is a rising norm. Not a rising norm, it is a norm now, you know, amongst even the sovereign issuers. So there is this, you know, a sovereign may feel that, okay, I am the sovereign, so why should I get third party verification, you know? But that is, that's a little bit of a, what should I say? It's a way to look at these things. I mean, these bonds are basically the differentiator for these bonds is verification, is that use of proceeds, is that independent sort of an audit. Okay, and so sovereigns are doing it because that is getting rewarded in the market by investors. So let's just look at these two things at the same time, you know. So and actually it helps a couple of things that Shantanu mentioned, that what is that over a period of time assessment of where the use of proceeds is going. So a second party opinion usually does a point in time assessment. It has given you this rating, it's given you the score, and that's it. Okay, if you were to go for a certification, for example, which is also an option, because, you know, most of the assets are in that broad dark green or possibly certifiable as well, then you actually look at it through the period of the tenor of the bond. Okay, which hugely advances the comfort factor of investors. And what does that do? That, you know, okay, going forward, the investors also want to reduce their due diligence efforts, right? They also want to feel comfortable that, okay, you know, this portfolio of assets that I am investing is not contaminated. I mean, by the way, I'll just give you an example. You know, Shantanu raised a very good point that some of those things can be looked at as red flags by international investors. In fact, in China, that was something that happened, you know. So it had a clean coal category in its green bond catalog, And they removed it because they said that if you are actually wanting to get the international investors to invest, then remove those categories, one, for which there is another finance flowing anyway. So why should that be in your sustainable finance category anyway, right? Two, it is that ambiguity that actually impacts the entire portfolio and the market sentiment. So, and market sentiment, investor demand is the key to getting that preferential capital for you. So I would say that, sticking to best practice approach in evaluation would be very important. And I think just a more systematization of this whole process. It is already pretty good. The start is quite good, but we are just sort of entering into this market. We will learn also as we go. And as you would see, anything that India does will get the attention, okay? Will make a difference domestically, will make a difference in what emerging economies, how they look at, will definitely make a difference to investors, because India is, if India is looked at as a very, very critical element of the part of the solution that the world needs for, climate change, SDGs, etc. Just because, the massive, footprint that we have. And also the kind of good work that we are doing, but that needs to be sort of more coordinated in the right direction. I don't know whether I answered all of your questions, because maybe I missed a couple of points. So please ask me again if I didn't answer.
No, that is definitely very useful. We need to go on a principles approach. We need to be clear about what criteria. Um, Definitely, things like clean coal will raise red flags amongst investors, and these kind of aspects. There is a question in the Q&A that I'd like to take up, because it seems like a follow-up to the discussion we're having on how projects will be evaluated, but also looking at there is a question on negative externalities, and I assume that's based on the kind of projects, but I'd invite either of you to please respond to that question.
Shantanu, please chime in, but this is something that is coming from what SEBI just recently released, right? I mean, if I'm correct, because greenwashing is a huge concern. It is a concern for the market regulator. It is a concern for the issuer. It is a concern for the investor, because, when the market is growing, you don't want any kind of greenwashing, transition washing to happen. So because that's a dampener, and it's even when before you start out, you basically stop, right? So that is that. So SEBI recently said this, that can negative externalities will have. This is a tough one to do, and it will be. I'd be very interested in how this gets more defined. Again, the approach that our regulators have taken is, and for the right reason at one level, is to keep things broad, okay? But I think as we are moving towards market growth and propelling this further, there is going to be a demand for more granularity, and that is what we hear from market participants. You give us some criteria, give us, this is good, this is bad, and because, like, especially in transition bonds, right, and in transition space, not bonds, yeah, where now it is not use of proceeds only, it is actually the process which needs to change. It is more outcome based, KPI based kind of instrument that you're going to use. And globally right now it is growing very fast, but if it is not credible, then that growth will also get hampered, right? So I think on the negative externality kind of a thing, how quantified it is, all of that, it's not an easy job. How much will we be able to see that happen is something that I'll also be interested in, observing. And but it's a very good way in the sense of looking at things that don't, what you're doing positively fine, but if you define that, we would know better that you're not overclaiming the positive, right? So it's a way to address greenwashing in some sense. And I think it is still to be seen how that gets more sort of independently verifiable also, Shantanu, I mean, do you have any ideas? I mean, it's an interesting point for each one of us who observe these things to discuss and debate these things also amongst ourselves.
No, definitely. I think I agree with you. I think the government at this point in time has kept the framework quite broad. So if you look at the revised circular for green debt securities that was issued by SEBI a couple of weeks back, it includes as a requirement to make sure that you have a process in place to understand what are the effects, social and environmental effects of a certain project that you're taking up, green project that you're taking up, and what are your mitigation strategies to make sure it does not happen. So that's similar to something like an EU taxonomy, where you have these 6 environmental objectives. You're focusing on one objective, but you also have to make sure that you do no significant harm on the other 5, and then there's certain ILO mandates that you have to take care of. So I think it's a process, it's an iterative process, similar to BRSR, right? So BRSR at this point in time, it's just rolled out to the top 1,000 listed companies. It's expected going forward, it's going to increase in its depth and its requirements as we see more and more iterations of the BRSR. So I think, yeah, going forward, we'll have to, stitch these loopholes. We'll have to make sure that all of these things are taken care of. And I think the revised green debt circular by the SEBI is one such attempt in that respect. And I think for the green bond framework also, we might see some iterations of that going forward, depending on public consultations, depending on what the experience has been and what investor community has, told the government or the RBI on this particular front. So yeah, that to answer the question, I think right now that's not really addressed, but at this point in time, it's just going to be depending on what kind of projects that you take up and whether or not the negative externalities that emerge from them are significant enough for the government to really act upon them, right? So yeah, that's I think that's where we are.
I think there are more questions.
Yes, there are, and I think there's a linked question on the kind of rating agencies that are around in this space, because I think that will also have an impact in terms of how projects are reviewed and ultimately more investor confidence, etc. So if either of you could sort of respond to that.
Shantanu, please go ahead. I'm just scrolling down the questions. I will chime in.
What question are you talking about? Sorry.
There is a question on are there any rating agencies which cover green bonds right now?
I think the conventional rating agencies, the Moody's, S&Ps of the world, they cover green bond ratings. And see, right now, it's a GSEC, end of the day, right? It's a triple B minus for Indian GSEC. It's going to be triple B minus for the sovereign green bond also, right? But credit ratings and ESG ratings, they are a bit different, right? So I'm not sure what exactly this question is asking for. ESG ratings are also provided, right, for instruments, for companies, for assets, and over there, the methodology to assess whether what a particular rating has to be given to a particular project, economic activity, or asset, that's a bit different from what a credit rating agency would do, right? And over there also, in terms of ESG ratings, also there are a number of entities today that provide ESG rating, right? Again, the conventional bigwigs of credit rating space, the Moody's, the S&Ps, the Fitch of the world, all of them provide ESG ratings also. And then you have other new firms such as Sustainalytics. You also have MSCI, you have CDP. There are a bunch of other companies also which provide these ratings. So it's a space that is developed now, and you have ratings provided for such instruments also. The only thing is that if you see the ratings, a credit rating for a particular debt instrument and the ESG rating, right, for a particular instrument, I would say the difference is that 10 different entities would give 10 different ratings for the same asset or economic activity, whereas credit ratings do not vary that much. So it's a space which is still in development at the moment. But yeah, I mean, going forward, we expect that there is going to be some standardization in terms of what the rating methodology is and the ultimate rating for a particular company or an asset.
Shivani, if I could just scroll down, and if, one by one, if, briefly, we could just address these questions. I think on the greenwashing, we have already spoken, and on the ratings as well. And I think the question that, on quantification of negative externalities, it was much more specific in the case of utilization of the proceeds of sovereign green bond. So my answer would be that we don't know. I am not sure whether there will be quantification of negative externalities. For that, you will need a system. You would need and that is not a requirement as such. So nobody's to know whether there would be, but if there is, it will be very, very interesting to watch and observe and analyze. And then there was this question also, why is green bond preferred as an effective financial instrument over others such as blended finance? I think these are completely two different things. Green bond is a different instrumentality to raise funds, and blended finance is quite different. So the blended finance would actually mean that public capital actually gets joined up with some private capital, and then you blend that to be able to crowd in private capital in much greater volume going forward. So these are two very different things. So let's not confuse that. But right now, I think in the interest of time, I will simply just mark out the difference, that they are not effective or less effective or more effective. They are used for different segments of investment, and they are different instrumentalities. Yeah. And then there is, are there limits to the number of issuances of SGB annually, and are there tranches allocated to within a given year? I think it is predetermined, and we had that announced already, and they were supposed to be, and this was announced by the Reserve Bank of India, which looks after the debt management for the government of India. So they define it. It had to come in the debt calendar. That was already defined in the 2022 budget. And so it is very specific, and it is predetermined, right, according to the borrowing calendar that you have. Government of India, have there been any international consultations with entities like ICP Investor Confidence Project? I won't be able to answer this question because I don't know if there have been, and my guess is that probably they haven't been. So, but there is no definitive answer that I can give on this. Shweta is asking, for those who missed the first part of this discussion, please define and how it will accelerate India's NDC targets. Okay. Shantanu defined that. It is a green, it's a normal bond with green features, in this case particularly issued by the sovereign. Green bonds can be issued by governments, by corporate entities, by public sector entities, by state-backed entities. When a sovereign issues it, there is a sovereign commitment, right? And sovereigns are deemed to be not defaulting on their promises on the servicing of the debt. So it's a huge sort of a step, and why it is important and significance is that we need to unleash all sources of finance to be able to speed up and scale up the financing that is required for our SDG and climate targets. So when governments do it, they make that market. They provide a much bigger impetus, not only by having a good issuance themselves, but also by how it becomes a benchmark for the market creation. Yeah.
Thank you, Neha, for taking all those questions. It has been immensely useful. If there are any questions, because we are still at 12:30 and we intended to keep the session on till 1 o'clock. So if there are any questions, please do ask away. We can hold on for a minute or two. If you have questions in retrospect a little bit later, you can also send them in and we can try and have them sort of responded to. I'll pause for a minute to see if there are any questions. Otherwise, for me, it has been personally very, very, very useful in understanding sovereign green bonds and how they're going to or likely to unfold in the sort of coming days with the challenges, opportunities, etc. Um, and yeah, it seems like we have no more questions, so we could sort of wrap this up earlier than expected. Um, Thank you both, Shantanu and Neha, for taking the time again.
Thank you so much. Thank you for organizing this session, and I hope it was useful. It was always good to talk and listen to Shantanu, and thank you for the brilliant questions that came our way. So thanks a lot.
Thank you. Thank you,
Shivani, it was a
Shantanu.
very engaging discussion. I think the audience got some insights on green bonds, and always happy to engage afterwards also on any questions or any insights that anyone would want to discuss. Thank you so much.
Thank you both. All
Thank
right.
you. Bye.
Bye.
Thank you.